Well, first of all, let's talk about this UBA story. Was the big news from last week, this profit warning and the impact that it might have, and of course the signal that it's sending for earnings, the earnings season that we're going into in late March and early April. What can we take away from that announcement?
Okay. I think one key thing here is that we might need to look at the fundamentals and the peculiarity of each of the players in the market. And when I say players, I mean the banks now. For instance, UBA came out last week, just like you know, to announce, to give a profit warning that there is possibility of recording losses on the back of the exposure to Xenon, which was sold to Hamcon in October 2011. But one key thing here is the fact that 5 banks were exposed.
Right.
But the level of loss that it will make on the sale of that asset to Hamcon will depend on the exposure of each of those banks, and of course the level of securitization that you find in each of those players, because the collaterals that they actually got backing that asset is different from each of the players, even though it's a syndicated loan. And of course you also have to look at what is the provisions coverage level as a Q3. Say for instance, while UBA got about 40% haircut on the sale of that asset to Hamcon, just because of the level of maybe I say quote unquote relatively weak coverage level and securitization for that exposure. The other banks, which are also exposed, like of GT Bank, Access Bank, for instance, got between an average of 10% haircut, meaning that they got 90% of the book value of that asset. That's because they have relatively more adequate coverage, securitization collaterals backing those assets. Don't forget that Hamcon actually buys based on the level of collaterals that you have. So one key thing here is that the collaterals backing the asset for each of those banks are different. The other guys got 10% haircut adjustment, UBA got 40%, meaning that when you're looking at UBA, it might be very wrong to actually generalize that for the other players that are actually exposed. The same thing goes for First Bank, for instance, which sold the sale of exposure just because they have to comply with the 20% obligor limit to Hamcon. They also got about 10% haircut on the sale of that asset. So the difference is definitely is one thing we have to look at. So we need to look at the peculiarity of each of these banks as against a general view based on what UBA has.
Right, before I get your thoughts on which other banks we should be worried about, let's take with UBA for a little while. We've seen the share price take a bit of a hit in reaction to that news.
Yeah.
Is this a buying opportunity? Because we know that this is all history. It's what's going forward that really matters.
Yeah, I must say sincerely that UBA is oversold in the market. I think the market has overreacted to that news flow. Say, for instance, I was expecting them to actually make a loss in Q4 standalone. As at Q3, they've actually reported a profit after tax of around 11.1 billion. We in Vetiva, we're expecting them to make a loss of around 3 billion naira or 3.5 billion naira in Q4, meaning that we are expecting a full year profit of around 8 billion, but now it's likely going to be lost, not because of the exposure to Hamcon alone, but also because of the contract that they locked into, which they recorded losses on, and of course they have to exit their position. But one key thing at this point is the fact that UBA is trying to clean the books. They're trying to position the bank again in such a way that will continue to begin to make profit over the next few years. So for me, I think I will look more into the future for UBA, particularly that the African footprint is now beginning to record profit. For instance, at Q3, about 14 out of the 18 African countries where they're exposed to actually broke even in Q3. Meaning that the more we see earnings coming from this African market, the more they are accretion to the group numbers. And of course, the better the quality of the asset that they're sitting on, likelihood that UBA will definitely bounce from that level that we see. If you look at the Q1 earnings guidance that they gave last week, I think the bank is expecting around 12 billion naira profit after tax in Q1, even though I'm relatively conservative on that estimate, but at least it's a signal to the fact that there's possibility that it will actually rebound from this level, which of course is our expectation if you look at the most recent note that will put out on UBA.
Right, just you can just name the names here. Which other bank do you think you're worried about? We don't have much time to discuss them, but which other one do you think might surprise us?
I think for me, it's not going to be a surprise. First Bank, for instance, in Q4, I'm expecting them to record a profit of just around 600 million. Of course, by full year, maybe we'll be looking at around 43.5 billion against the 40.5
So First Bank is another one to watch.
Of course, because of the silver exposure. But like I said, it's just a one-off loss that they will book on the sale of that silver exposure.
All right, we have to leave it there. Thank you.